Welcome to the VALR Podcast. It is a great pleasure to be able to welcome Dawie Roodt to the podcast. Dawie is the founder, director, chief economist of the Efficient Group, previously an economist at the SARB, the South African Reserve Bank, which is the South African central bank. He's a nationally renowned economist with over 30 years experience. Apparently, Dawie, the most referenced economist in South Africa, has received rewards, prestigious economist awards. Also the author of a book called Tax, Lies, and Red Tape. And one of the things that I also have a lot of respect for is the fact that he is a 2 times Comrades Marathon runner. And for those that don't know the Comrades Marathon, it's a marathon that's not 42 kilometers, but it's about 90 kilometers. So it's an ultra marathon. So we have a crazy man with us as well, someone crazy enough to run that long. Dawie, very welcome to the podcast.
Thank you so much. Very nice joining you.
So today we really want to talk and really draw upon your expertise. Obviously, you're an economist that came into contact with the crypto space, and we'll get there. But maybe just to start off with, from your perspective, talk to us about how you view money in general. Where did money come from as an economist? The history of money, however you want to answer that.
Yeah, in a way, I think we've gone full circle when it comes to money. Let's just go back to kind of the beginning. I think money was one of the greatest economic inventions of all time. For very obvious reasons, but maybe we can touch on some of those reasons. But just go back a little bit before money was actually invented, to the time when we were hunter-gatherers. And I would say, from an economic perspective, one of the most important and significant economic breakthroughs was when we started to recognize something called private property rights. Because, and this is very important, the concept of private property rights didn't really exist. I mean, in the past, we were hunter-gatherers. You will kill a rabbit, and you have to eat your rabbit very quickly because somebody else is going to eat your rabbit. You take your rabbit away, or maybe even eat you. So the concept of something that belongs to me did not exist while we were hunter-gatherers. And when that was established, and this probably happened 10, 15,000 years ago when we started domesticating animals and plants, when that was established, something else happened. And that's crucially important as well. Now, there is a saying that there is no free lunch, but there's one free lunch, and that is free trade. Because in free trade, I can exchange my stuff for your stuff, and you and I both gain from the transaction, because otherwise we wouldn't have transacted. So that's a free lunch. You and I are both better off after the transaction. So think a little bit about this transaction, free trade. What basically happens is that ownership moves from the one individual to the other individual. Ownership is information. And that's important, that information. Because I said we've gone full circle, basically. And I think crypto, in a way, is something that carries information. And the information, and we get to that a little bit later. But initially, trade was the exchange of information. I become the owner of your stuff, you become the owner of my stuff. So those are, by the way, 2 very important requirements for a successful economy: protection of private property rights and the encouragement and protection of free trade. There are some others as well, like, for example, sound money and stuff like that. So that was the beginning of money in a way. Money did not exist yet, the way that we see money, but in a way it existed already because there was this exchange of information. And in my example, it is the exchange of ownership. All right. But there are major problems with barter trade, because if I've got a sheep and I want 1 chicken, I have to exchange my sheep for your 10 chickens, and then I've got 9 chickens I don't want. So obviously there are some problems with this free trade and problems that needs to be solved. And we gradually started to invent money, and we had all sorts of money. Eventually, we kind of settled on precious metals, and gold typically became money. Now, that made life so much easier, because I can exchange my sheep then for a piece of gold, and then I can only use a small piece of gold to buy your chicken, and I can, for the rest, I can save and I consume the rest of the gold in future. So I can save my money forward. So that's, I can postpone consumption, which is another major wonderful thing about money. And then gradually from there on, money evolved into something else, and it involved gradually in something what we call a paper money. And that basically probably started, well, in China, many, about hundreds of years ago. But it also started in Europe because paper money was basically IOUs issued by goldsmiths. So I will go and deposit my gold at the goldsmith, and they will give me a piece of paper called an IOU. And instead of going to get the gold, I give you the piece of paper and you can get the gold later. That was the beginning of paper money. But of course, they started issuing too much paper, too many, and without the necessary gold backing. There was a run on the bank. That was the first run on the bank. And then the authorities said, listen, but you have to have at least so much gold to cover your paper money. And that, in a way, was the beginning of paper money. And eventually, central banks took over that role. And then then everything worked fine until roughly the Second World War, when we moved, after the Second World War, we moved back to the gold standard. And what happened then is that countries had their currencies fixed at a certain exchange rate. We were on a gold standard, and America was basically responsible for the total volume or stock of gold of most countries in the world. So what happened practically, really what happened is that if there's a deficit between country A and country B, then America will take gold literally from one cage to another cage in order to pay for this trade deficit. But the thing is, America kept on running huge trade deficits with the rest of the world, and that means they had to take their gold out of their own little vault and move it to the other countries' vaults. And they're eventually going to run out of gold. And Richard Nixon in 1971, he said, no. I'm going to stop the system because I don't have enough gold. From now on, if you want something, I will give you dollars. And that was the beginning of what one call real fiat money. And fiat, the word fiat means let there be in Latin. Like, for example, the words fiat lux means let there be light. And fiat money means let there be money. So there are two important in this system. There are two kinds of money that are very important. The one kind of money is what economists call base money. So the central banks will create money out of nothing, dollars or rands or whatever the case might be, and they will put it into the system. They give it to banks, and banks will take this base money and lend it out and receive deposits again, and lend it out and receive deposits again. And by doing that, this credit system, they increase the total volume of money out there. They create money by this credit system. People borrow and deposit and borrow and deposit at the banks. But the whole system starts with the central bank creating initially your so-called base money. And central banks make sure that money maintains its value by making money more or less expensive, and we call that monetary policy. And typically what they would do, they will increase or reduce interest rates. Okay, so that was until relatively recently. But now, a couple of years ago, somebody came with this wonderful idea. So listen, but why should everything still... Let me interrupt myself. So why is it that money has value? Why has the US dollar or the South African rand or the euro or the yen or the ruble or whatever, why is it that it has value? And there are two reasons. The one reason is we trust central banks. We trust them because after a while, we start trusting them because we're getting used to this currency. There's a second reason why money has, the most important one is trust, so confidence. The second one is that politicians force us to buy whatever currency. In the case of South Africa, rands, because I am not allowed to pay my taxes in cows or in sheep. I must pay my taxes in rands. So I must sell my cows and my sheep and buy rands in order to pay my taxes. And that creates a demand for the local currency. So those are the two reasons. Confidence, the most important one, and the forced demand that is created through legislation because I have to pay my taxes in that. All right. But then somebody some time ago started creating this new thing on a new wonderful technology called the blockchain technology. And they gave this new currency a name and they call it Bitcoin. Now, Bitcoin was all over the place. It was extremely volatile. Nobody trusted it. Remember, trust, that's very important. Confidence. So nobody trusted it. It's up and down all over the place. But there are two things when it comes to Bitcoin or cryptocurrencies. The one is this amazing technology that is very, very secure, and this technology is called the blockchain. And you can put all kinds of information. Here the word is again, information. You can put all kinds of information on the blockchain, like, for example, who's the owner of sheep or of a house or whatever the case might be. But you can also put a currency on the blockchain, and that is exactly what Bitcoin was. And initially, nobody really trusted this. This was a couple of nerds on the periphery that really started trading this thing called, a new thing called Bitcoin. But gradually, Bitcoin became more accepted, or cryptos become more accepted, and eventually they become pretty much mainstream. And that is pretty much where many of these cryptocurrencies are today. They've become mainstream because more people are using it, and more people's got confidence in this thing, and everything lies on this platform called the blockchain technology, which is very secure. So what's going to happen next? Now, this is a bit of a jump. I don't know what's going to happen next, but this is what I think is going to happen next. Remember, if you go through the history of money, money was created and destroyed in many cases. The history of mankind, you can see there are so many currencies, monies that was destroyed by politicians. And politicians always destroy a currency. And even today, there are many currencies that are disappearing. 20 years ago, 18 currencies disappeared in Europe, and they were all replaced by one currency called the euro. And in fact, even the US dollar, the mighty US dollar, is disappearing in a way because inflation erodes the value of the US dollar. And currencies will disappear. That's the nature of currencies. Monies will disappear because that's what politicians do. They erode the value of money. And the reason why they erode the value of money is because they incur so much debt that the best way, the easiest way of paying off your debt is by simply making your debt less valuable. And that's what inflation is. So you erode the value of money, the value of debt, and you're actually paying back state debt through inflation. So all monies will always disappear.
Let me interrupt you there, because that's a good point about, obviously, when you do have inflation, then the value of your debt decreases in real terms, and so it's easier to pay it off.
Yeah.
But there's also economic theories that say, well, the reason we also have inflation is that people's purchasing power decreases over time, and so they're incentivized to pay now, so that the economy can actually have people buying and selling, and a more richer economy and a more activity in our economy. Yeah. Is that an economic, like, what are your thoughts about that economic theory as well? Is it purely just the debt is why we have inflation, or are there other reasons?
Can I skip that question? Let me just complete my story on money, and then I'll come back to that. Sure. Because that's interlinked with something else. Okay, so that's where we are at the moment. We've got this new kind of money called crypto monies. It's becoming more mainstream. People are getting confidence in this. And this is what I think is going to happen. I think in future what we're going to see, and central banks, by the way, are jumping on a bandwagon as well. And many central banks are creating their own central bank digital currencies now. And the thing about the central bank digital currency is that it is a programmable currency. Central bank digital currencies are programmable, which means basically that if I buy central bank digital currencies, I will have, in a way, open an account at the central bank, which doesn't happen now. And that means that if the central bank goes through my account and they can see I'm buying too much brandy, they're going to say, listen, but this guy, he's got a problem here. We're going to program his wallet so he cannot use that to buy alcohol, as an example. Or they can say, listen, but this guy is saying bad things about government on Facebook, and they're going to take 20% of my wallet away. So you can see this is amazing power in the hands of the authorities. And by the way, this is happening already, because the social point structure that they have in China is basically that. If you say bad things about government, you can't buy a plane ticket. So it's very, very dangerous in the hands of ineptocrats. I call them ineptocrats. So I think in future, there will be a bunch of dominant central bank digital currencies, and the big ones. It will be the yen, it will be renminbi, it will be a dollar, the euro, and so on. And I think the smaller ones will disappear. And so it will be dominated by the big central bank digital currencies. But at the same time, I believe there will be a counterweight, and that will be private sector digital currencies. And not only private sector digital currencies in a way that we understand a real currency which can be used as a reserve currency as well. Private sector dominated payment systems as well. So that's what I think the future is going to look like. You've got this private sector, and that actually goes to the fabric of what is a country. But let me get to your question now. So this is the question about money. There are three things that make an economy successful. I also already mentioned the first two. You must protect private property rights. That's the first one. The second one is you must allow and protect and encourage free trade, because free trade is a free lunch, because you and I gain from a transaction. But I cannot trade with you if I'm not the owner of that. Okay, so that's a second requirement. The third requirement for a successful economy is sound money. And sound money means low inflation. Now, there's a definition for inflation. There are two definitions for inflation. The one is things become more expensive. That's one definition. But another definition for inflation is money loses its value. It says the same thing in a way, but there's a major difference here. In the one instance, the emphasis is on things getting more expensive. So people think, which is not the case, by the way, people think an increase in the price of petrol or an oil is inflationary. It is not. That is not inflation. It's only inflation if it becomes a process. And a process requires more money. You must create more money in order to feed this monster called inflation. I prefer a definition that says inflation is money losing its value. And money can only lose its value if you have a X amount of money and you use 50 Rand on this product and 25 Rand on that product and another 25 for ABC and whatever. That's your fixed a volume of money that you have available, and one product becomes more expensive, then you cannot spend more. You can't buy the same stuff anymore because you just don't have money. And you can only buy more stuff if the central bank allows you to create more money in the system. In other words, more money must be created in order to feed this thing that we call inflation. Okay, let me just go back to something that is very interesting. I studied communism. I think it's fascinating, a fascinating ideology. And in the old Soviet Union, all prices were fixed. You were not allowed to buy things, to ask more for stuff, for bread or milk or cheese or whatever, than the price that was fixed by some committee somewhere. So, and everybody, and the allocation of resources in that economy happened based on some economic committee somewhere telling a factory, I will give you so much diesel, so much resources, so much whatever, electricity, so many people to work there. And with this input, you must create this, and that's the price that you are allowed to sell it for. That is a hugely inefficient system. I'm not even talking about the corruption and the incompetence, and so it sounds pretty much like the South African government. I'm not even talking about that. The problem with this system is that you do not know what to make, because prices tell you what to make. Prices are those signals in the economy telling you make yellow shoes or pumpkin color shoes or whatever the case may be. But in the Soviet system, it was a centrally controlled system. It was a command system, and factories were told what color shoes to make. In a free market system, the consumer tells the factory what color shoes we want. That's what, and in a free market system, you get these signals by looking at prices. And if there's an increase in the price of one thing, that means there's an increase in demand or a fall in supply, and those are the signals. But in an inflationary environment, you cannot see the signals. If you cannot see the signals, because all prices are going up, if you can't see the signals, you cannot allocate scarce resources optimally, and your economy will not grow well. And that's the third requirement for a successful economy. So the three things: private property rights, free trade, sound money. You do that, you've got a successful economy.
Wonderful. Thank you. Thank you for that overview. Maybe that's a good segue. I'll come to the Bitcoin and your experience with Bitcoin in a second, but let's continue with your kind of where we've come from in money and where we are and where we're going. So right now, we have experienced quite a bit of inflation over the last few years globally. It started coming down a little bit. There are a few questions about whether it is going to keep going down. But obviously, with a lot of the policies now coming out of the United States, there's a lot of the conflicts around the world, there's questions about whether that's going to continue. It sounds like what you're saying is right now, with inflation so high, with the devaluation of money in your definition, right, which is exactly what it is. That's what I explained to people. Inflation is the devaluation of money. It's definition. 3 to 6%, your money gets devalued every year in South Africa. Otherwise, the central bank hasn't hit its mandate. 2% in the United States and in Europe and in other places. So are we at the point right now with the amount of money in the economy and with devaluation that because we have effectively essentially planned money market? What I mean by that is interest rates are not free floating, right? Everything else in our economy effectively in the West is, the market decides. In the West, the market does not decide the price of money. The interest rate is dictated by that central committee that you're talking about, a central bank. Are we seeing a misallocation of resources in the world right now because of our monetary system?
Yes, but you're wrong. Most interest rates are actually determined by the market. Most interest rates are determined by the market. Let me explain.
Yeah, please.
Okay. So remember, when you talk about interest rates, what do you mean? As banks go to the central bank, that's what's called the most important central bank. The most important interest rate is of course the short-term interest rate set by your central bank. So the central bank will typically set an overnight rate, and that is the rate at which the banks borrow money from your central bank. The banks then will take this money and they will lend it out to customers, and usually they add a margin to that. But that is not where the bulk of money goes. The bulk of money goes somewhere else. The bulk of money goes, for example, in the case of the US, for example, and in the case of South Africa, the biggest market out there is actually the capital market, the bond market. And in the bond market, I will take my money and I will lend my money or buy a bond. And that bond is typically sold by the government. And the yield or the interest that I get on that bond is market determined. And of course, your central bank, and that's most money, most interest rates in the economy, of course, your central bank affects that. But it is set by the market. And quite often what you will find is that you will find long-term interest rates or the yields on capital market interest rates are actually below that of central bank short-term interest rates. And that's usually a sign of it's a so-called inverted yield curve, and that is usually a sign of a coming recession, for example. But you're right in the sense that your central bank sets short-term interest rates, but most interest rates out there are actually set by the market.
So this is my opportunity to argue with the most referenced economist in South Africa. So I would argue that yes, it's true that the capital markets have their role, but pretty much all of those capital markets are related to a risk-free rate, whether it's treasuries or it's JIBAR. It has been JIBAR in the past, etc. And that you say, okay, what is the price of this particular corporate bond, etc. And it's generally related to a benchmark, right? So basically, and in the United States, you have the overnight rates, but you also have quantitative easing, where the United States central bank is trying to dictate what long-term interest rates are by buying and selling treasuries and other assets in the markets, in the open markets, and by manipulating the markets such that they get to what they would like to see. So I would say that is definitely not a free market, and that is actually a manipulation of the interest rate.
Okay, let's just get to that. Let's just understand this term. You've used the word a risk-free rate. So what does it mean?
Which, by the way, I don't think is risk-free, but that's what it's called in the.
No.
in
What is meant by risk-free is that since your government is such a dominant, the biggest player, the government is if you lend money to the state, it is supposed to be your safest investment that you can make. Because the state cannot go bankrupt, or at least that's the theory. The state is the safest pair of hands. Now, what is meant by a risk-free rate is if I lend money to the state, what return am I going to get? And if I get a 5% return by lending money to the state, that then is the risk-free rate. It's not risk-free, but that is assumed to be the lowest risk investment that I can make in the economy. And usually what I do then, I compare my other investments to that to see how much I get more or less than the risk-free rate in the economy. It's not risk-free, believe me. Governments, they've been stealing money for many, many.
I'm with you. It's definitely not risk-free. I'm
It's
100%
just
with
a
you.
benchmark. It's just a benchmark kind of thing. But what you are referring to is so-called quantitative easing. What happened with quantitative easing, basically, is that the central bank started buying a lot of this government bonds. What it comes down to, and this is important, remember what I told you at the beginning. Money consists of two things. As high-powered money, the first money that you put into the system, but more importantly is what happens then. What happens to that system, the credit system? Now, during quantitative easing, what happened? Central banks started buying all these government bonds, printing money, so to say. So they started buying all these government bonds and they put all this high-powered money into the banking system. But at the same time, people stopped borrowing. So the second round effect, this money creation process, did not happen as many economists, including myself, by the way, predicted would happen. And the reason why the second round effect did not happen is because people lost confidence. I don't want to invest because of the financial crisis. I'm not going to borrow money. So despite central banks putting in all this high-powered money, nothing happened to that. And people didn't start borrowing. What is happening now and recently is that there's this extra money lying around, and now we do see an increase in credit demand. Central banks are doing the opposite now. They're taking some of this high-powered money out of the system, called quantitative tightening. So is it good or bad? I still have to get my head around that. I'm not 100% sure, but I think what we have to admit, and I'm pretty sure you are a real libertarian or a real free marketeer, and believe me, I'm as well. But we sometimes, even rational people like you and I, we have to admit, but if we tried something else during the financial crisis, if central banks didn't come to the party and did what they did, what would have happened? And I am pretty sure what would have happened is that the economies would have been forced in a very deep recession, but I'm pretty sure the economies would have bounced back much stronger thereafter. But we will never know. We will never know. Because the problem with economics is you can't really repeat an experiment ever. That's the problem with economics. So but
So Dawie, that's a segue into this question, because you're absolutely right. Like, a lot of the Bitcoiners basically say, if everybody went onto the Bitcoin standard, if we had Bitcoin and we had nothing else, then the world's problems would be resolved. First of all, I don't agree with that. I think that the problems that we have in the world are not just related to what monetary instrument that we're using, but I do agree that many of the problems that we have derive from that. So on that note, many Bitcoiners love the fact that there's a limited supply of Bitcoin. It's capped. It can't go above the 21 million in 2140 in the year 2140.
yeah.
But then many traditional economists say that this is a flaw actually in Bitcoin, and it's not actually designed well, because they say the supply of money needs to grow with the economic activity such that you have relatively stable prices. If not, then you have effectively prices going down, you have deflation of your goods and services. So in your terms, appreciation of money, which means the prices of real goods and services are going down. So break this down for us. Is this a good, is this a bad thing? And what are your views about this?
Okay, Bitcoin, it can be any cryptocurrency, but let's assume we've got a cryptocurrency out there or a coin out there. People's got confidence in it. We've got a nice technological base call for it and so on. Before I get to that, let me just go back what I've said already. So what happens in a normal economy? Let's say what happens in conventional economy is that central banks will create this money, high-powered money, put it into the system, and the system will create more or less money. It is like a lung that breathes. And you will find that at the end of the month, typically when there are more financial transactions, people borrow more money, and the pool of money actually increases with more economic activity. In the middle of the month, you will see it shrinks, it contracts. So the credit process increases or reduces the size of the total pool of money out there without the base money actually going up. And that is, I think, one of the biggest deficits, one of the biggest shortcomings of cryptocurrency at the moment is that secondary credit market is not well enough developed yet. I believe we're going to see more of that, and I think it will be better developed over time. And I also believe that there will be all sort of derivatives that will be created. It's already there, that will be created on all sort of derivatives will be created on Bitcoin and other cryptocurrencies, and that will stabilize the value thereof as well. But in the meantime, we've got this issue that you mentioned, that the limited supply of Bitcoin, and I guess that over time is likely to keep on pushing up the price of Bitcoin as well. So exactly what's going to happen there, I am not 100% sure. But I want to make another point about money. And this is where new crypto monies are different from traditional money. Now, money's got a number of, we know the value of money. The one is, money is a place to save you can use it as savings. You can use money as transactions. You can compare things. A cow costs $100. That means a sheep costs $10. That means there are 10 sheep and one cow. So you compare the value of things. And so those are some of the requirements. What's the third one? And you can save in money. So there are some money's got certain characteristics. But crypto money's got another characteristic that is not included in this definition of what money is, and that is crypto monies can also carry a lot of information. Now, let me tell you what I mean with this information. And this is where the definition of money is getting a little bit blurry. Say, for example, I buy some sort of contract. Let's call it a smart contract from you. And the smart contract tells me that in a year's time, that contract will convert into Bitcoin. So this contract is basically money, but only in a year's time. So this contract carries certain information with it as well. You get that in modern economies as well, but that modern economy, it's a typical, say, for example, some sort of a forward contract that is separated from money. While now, those kind of contracts becomes part of money as well. And that is a big difference. And I can just make this comment about money. I've been following money. I've been trying to understand money. And money is seriously complex. I'm battling to get my head around money. But what I do know, every time there's a new kind of money and money evolved from one thing to something else, there's this huge explosion of economic activity. Now, what's the causality? Is explosion of economic activity leading to more new kinds of money? Or is it new kinds of money that leads to this new economic activity or extra economic activity? And I've got a suspicion it's money. I think money is a driving force behind a lot of economic activity. And what we're currently seeing is a new kind of money with different characteristics and importantly with information as part of the definition of money. And that's part of the reason why we are seeing all sort of things, especially in the United States. Wonderful new technologies, increase in productivity and things like that. And I think part of that has to do with this new kind of money.
So tell me where you first came into contact with the cryptocurrency space, like Bitcoin. What was your initial impression? And you mentioned earlier, well, let me pause with that, but where I want to go is kind of your views on it and what it means for our future. But where did you first come into contact with it and what was your initial impressions?
Okay, well, I can remember. I can exactly remember. I can remember who was the name of the guy that actually introduced me to Bitcoin the first time. I can remember I belong to all sort of weird organizations. And I don't know if you know this TV series called Pinky and the Brain.
Heard about it.
So it's pretty much the same. We get together and we talk how we're going to take over the world, and the next day we start all over again. So I belong to economic groups like that, and we were down a town called the Prince Albert in South Africa, and a beautiful little picturesque Karoo town in South Africa. And we started talking with there, and the guy mentioned the word Bitcoin. I've never heard of the word Bitcoin, so I asked him about Bitcoin. And this thing, it took me, I couldn't understand that. I was completely flabbergasted. This is a money, but it's not money. What is this thing called? I didn't understand it. I couldn't understand it. And after a long while, I think a few pennies, forgive the pun, a few pennies started to drop, and I started to understand money. Actually, a little bit later. And believe me, there's so much that I do not understand in money still. But slowly I'm starting to get my head around this thing called money. And not long after that, he showed me how to buy it. And I bought some money and I put some money in there. And I can remember there was a huge run on the price of Bitcoin. And I looked at my app all the time on my Bitcoin. And then there was a massive crash. The whole thing collapsed. And then and I waited 2 or 3 years. Sometime, and then about now, a year or whatever ago, I looked again and I said, my goodness, see how much my Bitcoin went up. But subsequently, what I did, I got involved. There's a town called Orania in South Africa. They have their own currency, but basically what they do, they take your rands and they give you a voucher in return. And this voucher looks like a note, but it's their note. It's a voucher. And they call it the ORA. So they take your rands and they put your rands in a bank account and they get the interest on that. In the meantime, they give you the ORAs and then you can use this ORA to buy at the various shops in the town.
Is it one for one?
It is one to one, yeah. So you can exchange your euros back for the rands. But what happens in practice, people buy their currency or their euros, it looks like currency, and they keep it as a souvenir. so the guys issuing this, the town council, which is in charge of this, they actually make a lot of money. So I heard about this and I slowly started to understand a bit the blockchain technology a little bit. And we went to them and we actually created a digital currency for them. And that was a lot of fun.
Like that's actually a digital currency that's in circulation right now over there?
What happened subsequently is that we were not involved in there. We just tested it a little bit, but they've taken that over and they have that in circulation. Yes, they have the so-called digital euro today.
Okay, got you. So obviously, I'll take it. I mean, when did you hear about this? By the way, when you heard about that Bitcoin, the word Bitcoin for the first time.
Oh my goodness, this is a long time ago. This must be well more than 10 years ago when I first heard about this. This is a long time ago, yeah.
Okay, and your view. So you talked about the future of kind of many CBDCs, central bank digital currencies, or maybe a few of the major strong ones, and then also these private cryptocurrencies. And some people talk about Bitcoin as a private cryptocurrency because it's not. It's a deceptive word because in many ways it's the most public, infrastructure that you can think of.
What I mean by private, I mean it's not dominated by an authority.
Or by the government. Absolutely.
Yeah.
Absolutely.
Yeah.
So is your view that these will coexist? And particularly when you think about central banks right now, I think many economists will agree that they've kind of veered away from, sound money policies. And this really have been there's been a lot of liquidity in the system. So do you think that the future will be where these coexist or where crypto assets like Bitcoin starts to gobble up some of these CBDCs, as you say, or
I think what the central, let's call it private sector digital currencies certainly are doing. Well, no, this is what the market is doing here. People's got choice now. And what this is going to do, it's going to force central banks and governments and private issuers of digital currency to behave. If you don't behave, people are simply going to get rid of your currency and they're not going to buy it anymore. And that means that governments will not be able to deflate their debt the way they used to. So I think in future, if you misbehave, the market is simply going to punish you. Governments, remember, and this is a bit of a philosophical point. Remember, a state or a government is basically an institution that monopolizes violence. That's what they do. Because the agreement, the social pact between me and the state is that I will not take the law in my own hands. I will allow the state to maintain law and order, and I will pay them for that by my taxes. And they will look after me. So the primary function of the state is to look after me and to look after my stuff. But the nature of economic activity is dramatically different today from what it used to be 100 years ago. 100 years ago, most economic activities happened in the physical economy, like in agriculture and mining and stuff like that. And today, economic activities are happening in the cloud. It's happening in the service industry. It's happening with all sort of technologies. That's where economies are growing today. And that, by definition, is not physical, which basically means that the monopoly that states have over violence becomes less relevant because the economies are not physical in nature. They can't hit you over the head because you're doing business in the cloud, because they can't touch you. You're in the cloud somewhere. And that means that governments will become less relevant over time. And since you have a choice now and you can start using private sector digital currencies, for example, if governments misbehave and erode the value of their own currencies, then one can start asking questions like, for example, but what is a country? should we have countries? Shouldn't be there some sort of other agreement where the individual is more important and where we can set up countries in the cloud with our own currencies and with our own economies? Why do I have to be a citizen of X country with a bunch of ineptocrats that keep on parasitizing me? I don't want that. So this is a real libertarian kind of world that I think is gradually evolving, and it's happening at all sort of levels.
You've no doubt read The Network State by Balaji Srinivasan.
I know of that. I haven't read that.
Okay, so you should take a look at that, because that's also what he talks about. Is that there's another state that's emerging, which is not just based on physical territory, but this network that we're talking about. And I think the world is changing very quickly. So one of the things you said earlier is that governments can force people to create supply for their own currency because they have to pay taxes in that currency. And what's interesting to note is that that's true, but in the ultimate story, it's the people that decide what that currency is, to your point. And the reason is, take Zimbabwe or anything else, there comes a point where if people vote to say, listen, I do not want this, and they sell it, the government itself will not accept or want the tax revenue in that currency anymore because it's valueless, right? So people through the free market will be able to say, I want this asset or that asset. One of my views is that I think that inflation really does hurt, particularly the lowest strata of society. And, people are living from hand to mouth, are not able to invest into financial assets or other assets that are growing in value. Very difficult to negotiate higher wages all the time. And we've seen the disparity in the world growing over time. And I think there's a level of education in the world, because even some of the concepts that we're talking about here, I mean, these are some of the concepts that I've been learning about, recently. I'm an economics major myself as well, but I didn't really understand what money was until I started questioning money because of encountering Bitcoin and crypto assets. So I think that in time, when people realize the destructive nature of inflation, and they realize that they have an option not to actually have their value in a currency that's depreciating, I do think that we'll see the end of fiat. I do think we'll see the end. And so I'm not,
no doubt.
Yeah, I'm not convinced that we'll get actually so far with our central bank digital currencies. One of the things that's actually quite dangerous for the public is that, you talked about people programming to say you can't buy alcohol or whatever it may be.
Yeah.
I think one of the most pernicious things that could happen is that we get into negative interest rate territory, and that you can't have a negative interest rate on physical cash because you can't clip, make 100 into 99. But if all your cash was in CBDCs, then it could be programmed
Exactly.
that becomes 99, becomes 98, etc., which I think is very, very dangerous for the populace.
Without a doubt. And I didn't even mention that. Thank you for mentioning that. That is another major threat to us. And that's the authorities decide that interest rates should be minus 10%. There's nothing you can do about that. So you're absolutely right about that. So, but it's not only about, I also agree with you. I think fiat is going to disappear. That's pretty much a given. But what I'm really curious about, I think other things could disappear as well. Like I've mentioned, I think things like states can disappear. And yeah, those wonderful things.
Maybe to add on to your history lesson as well, what many people don't realize is that this nation state as we currently know it is about 400 years old from the Conference of Westphalia. Now, in the grand scheme of things, that's a blip in the history of humanity.
Yeah.
And I think right now, through the internet, through crypto assets, we are questioning. I think we are seeing in front of our very eyes the degradation of the nation state as a fundamental unit of identity for the human race. And I think we're moving into different states, no pun intended again, of what identity is, what we belong to. And this idea of a physical border that has its own currency, its own token, I think is, when you think about it, is actually quite backward. So I think we're heading into a future where we're seeing this change. To your point about fiat currencies disappearing, do you have a timeline for that? Is there any thoughts you have about what you can share?
No, it's like I said, gradually and then suddenly.
Yes. Yes.
I can't see we still have fiat currencies in 10 years' time. I can't see that. I
Really,
think, yeah.
that quick?
I think fiat is going to be gone in 10 years now.
Okay,
But
so just
let me
hold on.
just make,
Hold on. Are you
okay.
saying that US dollar will not exist in 10 years?
Yeah, it will be replaced by a US digital currency. You can replace the existing US dollar by a US digital currency, by
Yeah,
the
but
way.
okay, but Davi, so let me put it this way, because I think even if we have a CBDC, to me that doesn't change the nature of a fiat currency. Because right now we have digital rands, we have physical rands, we have digital dollars, we have physical dollars. The money supply, if you give your physical, you can get the digital. Ultimately, the monetary policy, to your point, your area of expertise, is not affected really by whether you have physical or digital, because one's for one. You don't go to a restaurant and say, I'm only going to accept, you can pay it with physical cash or with credit card or digital. And then if you have a crypto asset that's a CBDC, all you're doing is you're replacing the digital or the
Exactly.
physical with another form, which is a third form. But it doesn't change the monetary policy, the ability to create,
Exactly.
etc. So I would say
Exactly.
that that's not going to change the nature of fiat currency,
No.
right?
No, it's not. But it will be technically a CBDC.
Yes, it will be. It will have the word crypto in it because maybe there is some keys associated with a public key pair, etc. But but ultimately, so are you saying like the U.S. dollar as a concept will disappear in 10 years' time, or are you just saying like we're going to be moving towards CBDCs in 10 years' time?
That's what I'm saying.
Okay, but you still think that the U.S. dollar will last for a long time
But well, there are other
in new
reasons why I
form?
believe the US dollar. There are other reasons why the US dollar will remain, specifically the US dollar, because the US dollar is the world's most important reserve currency.
Correct.
And the reserve currency means that if I get renminbis or yens or whatever and dollars, which one of those currencies is the most useful if I want to save it? And the US dollar is by far the most useful currency
Correct.
because
Very
I
much.
can put it in the US capital market, for example. And for that reason, it is the world's most important reserve currency. The capital market in the US is the biggest market, the most liquid, without any restrictions. Everybody wants to have US dollars for that reason. And if the US, if they maintain and they run their new dollar, crypto dollar, let's call it a crypto dollar, without too many restrictions to that, and make via the cryptocurrency, give it access to their capital market, the US dollar will remain the world's most important reserve currency.
Interesting. So
That,
do you see any scenario where Bitcoin becomes the reserve currency, or do you not see that?
that is something else. That is something completely different. Because what happens if Donald Trump gets his way and the US starts accumulating a lot of Bitcoin and put that into their reserves? Just by the way, the US Federal Reserve Bank also holds reserves in the form of yen and dollars. I don't think they have rands, by the way, and
Yeah,
gold and stuff like
yeah,
that. So
yeah.
they also, not much, but they keep a little bit of that, reserves in that. But if they should include Bitcoin as part of that as well, and Bitcoin becomes more of a payment system currency, then that would be interesting to see what is going to happen then. Then you will actually have a rival to the US dollar itself in a weird kind of way. Yeah, that will be interesting to see if they increase their holding substantially. You can't just keep $1 billion or whatever, but you have
Yeah.
to increase your holding of Bitcoin quite substantially and use that as currency in a way. Then that can really change the playing field. I haven't really thought of that. Good point.
Yeah, and it's actually interesting to think because right now Donald Trump is talking about a strategic Bitcoin reserve for the
Yeah,
national treasury, not
yeah,
the central bank.
yeah. That's
So,
different.
so it is different. So when you look at Jerome
Can I
Powell,
just interrupt there? Can I just interrupt
yes,
for a moment?
yeah,
Theoretically, the reserves at the central bank actually belongs to the state. So the Fed's
uh,
reserve belongs to the state, to the federal government. The same in
I
South Africa.
I don't think that's correct. And the reason I say that, I believe in South Africa as well, South Africa and the Federal Reserve, I think technically, if you look at the ownership of the central banks, they're actually ultimately owned by the banks, which are private institutions that have nothing to do with
No,
government.
no, that's untrue. In the case of South Africa, Dawie, I'm
Yes.
personally a shareholder in the South African Central Bank. I've got 200 shares in the South African Central Bank.
But
So,
that's
so
but
I
that's a
guess
private
the
private
reserves at
ownership.
this, it is a private ownership. So I guess since I'm the shareholder, I can demand the part of the reserves at the South African Reserve Bank. But that's never going to fly. In fact, if they make profits on their reserves at the South African Central Bank, those profits belongs to the state. So the Reserve Bank is only the custodian of the official reserves of the country. It doesn't belong to the central bank. It actually belongs to the state. It doesn't even belong to the shareholders of the central bank, of which I'm one. And I can assure you, if those reserves belong to me, I will be a very, very rich guy.
I'm trying to look into this. I think it's something good for our listeners to look into. Interesting. So you're saying that the reserves ultimately belong to the state of the central banks. Is that what you're saying?
It belongs to the country. Well, depending on your definition, what is a state or a government, whatever. But it belongs to the people in South Africa, and the Reserve Bank is the custodian thereof. And that is why, in the case of South Africa, the South African Reserve Bank, when they make profits on their reserves, they pay it over to the state. And when they make profits as a central bank, they also pay their profits over to the state.
Okay, I'm just reading on the Federal Reserve website. It's interesting. It says the Federal Reserve system is not owned by anyone. The Federal Reserve was created in 1913, which we know, by the Federal Reserve Act to serve as the nation's central bank. I'll look into this post the podcast, and maybe we'll have another podcast about this, because I have seen elsewhere that the banks also do have a stake in it in some way in the Federal Reserve. But that needs to be something.
They used to at the beginning of the Fed. Remember, the US had a very fragmented financial system before the Fed was created, and the banks got together. I think it was just after the Great Depression. I think Morgan Stanley played an important role there, and they created the Federal Reserve. But it doesn't belong to the banks as such. It belongs to the people, or one can say it belongs to the state. Then, if you like.
Interesting. So AI currently says no, banks do not own the Federal Reserve, but they do own stock in some of the Federal Reserve banks.
But those are local banks, you can say. Like, I guess the same as I'm owning shares in the South African Reserve. And I can tell you, I get a massive dividend of what, $8.50 every year.
Lucky you. So that's something for our listeners and to look into. I'm going to look into this after the podcast as well, about the ownership. Dawie, we're heading towards the end of our podcast. I wanted to see if there's anything I haven't asked you that you want to share your views on before we conclude. There's one thing
that I would like to say, and I'm this. Like I've said, I'm a libertarian. I like to call myself well. There's a communist in South Africa with the name of Jeremy Cronin. I wrote a book, and he calls me an unreconstructed neoliberal fundamentalist. I'm happy to be called that. I'm an anarchist. I guess you can call me an anarchist as well. The good kind. I don't care about that. I've got very strict rules. My rules are that I will not do bad things to you, but you don't do bad things to me. Those are basically my rules that I live by. But the things that we've been talking about, where we came from, how we evolved over time, money evolved with that as well, how the state is becoming less important and relevant, how technology is changing, how economies are moving into the cloud, everything that is happening. I think what is happening, what's going to happen to us. Remember in the past we had a king or a tsar or a whatever, Kaiser, and he was in charge and he killed people in order to make sure that he can control a certain geographic area. And he's the king. And that is changing. And in future, we're all going to be kings. And that's what I'm looking forward to. We're all going to be future kings. Can
I ask you about that? When you say you're an anarchist, are you saying that there is no role for government or there's limited role for government?
No, there certainly is. I live in a state, and I'm happy to live in a specific estate because we decide. Let me go back perhaps for a moment. What is this thing that we call democracy? People have got a completely wrong idea of democracy. But democracy is collective decision-making over collective things. Democracy is not collective decision-making over non-collective things. Let me give you an example. There's a principle called the exclusivity principle, which basically means that if you can exclude somebody from something, that is not part of democracy. For example, if you want to come and buy something from me and you don't pay me, then I'm not going to give this to you. I exclude you from this. But in some instances, certain things you cannot exclude somebody from. And a very good example of that is defense. The state will give you defense, whether you like that or not. You're going to get defended. And that is part of democracy. The democracy should be, we collectively decide over collective things, but for the rest, there's no role for the state. Nothing.
Gotcha.
I will decide what I drink, where I live, who I get married to, what I do business with. I decide that. It's my business. Nothing to do with the state, nothing to do with democracy. But when it comes to collective things, I'm very happy if we collectively decide about that. Which then means that this thing that we call democracy is far too wide. Politicians cannot decide whether we should have abortion or not. Politicians cannot tell me that I have to have certain whatever standards, that I'm not allowed to take my own life. That's nothing to do with politicians. Politicians cannot decide whether I want to sell my kidneys. It's my business. That's not for politicians. But politicians can decide on whether we're going to get a police force or an army, as long as we collectively decide that we need an army to defend us against whoever wants to invade us, for example.
And to enforce those property rights that you talked about earlier, etc.
That's another job of the state as well, yes.
Okay. Dawie, it's been a great pleasure having you on. I look forward to, actually, we've never met in person, so I look forward to meeting you in person and taking this discussion forward, and particularly deep diving into central banks and who owns them and what happens if a central bank fails. Because as you probably know, the Federal Reserve is actually the third central bank of the United States. There were two previous Federal Reserves to them that lasted 20 years each. So this is not a new thing for the United States, and the previous two didn't last more than a couple of decades.
Just an interesting one about central banks, and that is the oldest central bank is the Riksbank in Sweden, and the second one is the Bank of England. But many central banks got their origins because some politician, like the French central bank, by the way, some politician gave one bank the right to own it, to issue a currency. And in the case of the French central bank, Napoleon gave one bank the right to do that, on a condition that you fund my war effort.
Exactly. Yeah, absolutely. Awesome, Dawie. Have a lovely evening, and thank you so much for joining the show.
My pleasure. Nice talking to you. Thank you.